Kickback fees is splitting and unearned fees. Section 8 in Real Estate Settlement Procedure Act prohibits giving and accepting fees, kickbacks of any things of value in exchange of referral settlements, servicing. Okay. Prohibits giving and accepting fees, kickbacks of any of the value in exchange for referrals of settlements, servicing business involving a federal related mortgage loan, allows an item of minimal value used for prom- promotional purpose such as pens, memos, coffee cups, hats. That means I could buy you guys hats, but I can't give you money. So you guys will be getting some hats. Damn. All right. According to the Regulation X, a referral is an oral written action directed by a person which has affected of affirmation influence the selection of any person providing of the settlement service and business. Section 212 CFR Part 1024. Define prohibit things of value to include without limitation monies, things, discount salaries, commission fees, duplication payments, duplicate payments of charge, stocks, dividend, describes partnership profits, franchises, royalty, and credits, representing monies that may be paid at a future date, the opportunity to participate in. Okay. Defines the in money making programs, obtain and increase earnings, increase equity in a parent or subsidiary entity, special banks deposit or accounts, special unusual banking terms, services of all types of special and free rates, sales and rentals at specific price or rates, lease and rentals, payments based on the whole in the part of the amount of business referral, trips and payments and other person expenses and reduction in credit against existing obligations. Prohibits fees splitting, receiving unearned fees, and percentage of any other made and revealed for service not actually performed. Prohibits, requires the use of specific settlement service providers except in the case where lenders refer to borrowers to attorneys and credit reporting agencies or real estate agencies and appraisals represent lenders' interest of transaction. Whoever's falling asleep, good. That's what I'm reading about. So you guys go to sleep. Do not prohibit the payment of fees to attorneys, title companies. Any agent or agents for service actually perform payments of bona fide salaries and compensation to a person for goods and product actually furnished for service actually performed in the making of the loan and payments pursuant cooperative brokerage referral arrangements or agreement between the real estate agents and the broker. Allow legitimate discounts of service to consumer if a combination of settlement service and offer at the total price lower than the sum of individual service, as long as the use of such combined optional to the purchasers of the lower price and combined is not made up by higher costs elsewhere in settlement process. Subject violators to criminal civil penalties include a fine up to $10,000, imprisonment up to 1 year, liability up to three times the amount of the charge if paid by the service civil lawsuit. Under RESPA, a referring party such as lender may not accept anything value from a settlement provider such as a title agency or credit agency in exchange for referral or settlement business. What exactly does that thing value include? The term is very broad and interpretation and includes the payments in advance fund loan service. Other considerations offered in exchange for business referral. Ain't nobody there. Yeah. We're only gonna do 15 more minutes and then class dismissed. Okay? First we have to go to the honest tea. I can't say it was brought to you by this glass, but I did buy it at Chevron, so it's mine. I buy it, so now I get to promote it. They're getting free advertising just today because I'm being nice to them. But in the future, I'm gonna send them the bill. Look at that, organic tea. Salud, no tequila yet. There is nothing either good or bad, but thinking makes it so. William Shakespeare. That's what William Shakespeare says. Why this honest tea established 1998 wants to talk about nothing good or bad? No, I got my 2 jugs of water. I'm ready to go jogging. Okay, guys. So, for example, the consent order, introduction. Okay. In this discussion activity, you will apply your knowledge on the Real Estate and Settlement Procedure Act, RESPA, relating to Section 8, which addresses kickbacks and exchange to referrals in future business. Directions. Review the summary below the consent order between the A and B XYZ mortgage companies. Okay. Note, the full case is located on Administration Proceeding File 2015 CFB. Okay. Description. A new defunct title insurance. Oh, I got a new one. Who's watching me? A new defunct title insurance company was alleged by have provide marketing material. The loan originator in exchange for the MLO settlement title insurance business. This is a violation Section 8. Real Estate Settlement Procedure Act. These cases follow a fiction of study ABC Mortgage Company. Title included title search, title examination, title insurance, settlement, real estate procedure, transaction. The majority of title settlement services were to refinance transactions. No to the consumer seeking and refinancing mortgage loan typically do not have providers to assist in the closings of their mortgage loan, but rather rely on the advance of the choice of MLO direct to the reliable closing agent. Loan originators typically commission based on the loan amount closed. Okay. Got about 10 more minutes. Well, actually, no, maybe 8 more minutes. From 2009 to 2013, Title provides substantial value of market services to the loan officers in exchange for business, including purchasing, marketing leads for possible refinance customers from third party, providing marketing letters direct to the consumer leads that were printed and filled, stuffed into envelopes and mailed on behalf of the loan officers. In exchange, envelopes provided referrals of business to title settlement services. For more specifically, refinance transactions that envelopes had greater control over under agreement and understanding. Title paid loan officers cash for referrals for business. Loan officers arranged different marketing plans with Title. In some instances, loan officers received the marketing material for Title at no cost. XYZ Mortgage, more than 100 loan originators employed. XYZ had specific marketing arrangements and agreements with Title. First Title provided the purchase of leads with loaners who in turn submitted them to the XYZ advertising department for approval. Loan officers were also required to complete forms that disclose the source of leads. In addition, marketing materials also approve the XYZ advertising department. Once approval from the XYZ advertising. Hi, Fernando. We're studying mortgage lending. Once approval from the XYZ advertising department was obtained, Title was provided with approval letter leads together with the XYZ letterhead, stationery and described to the potential consumers seeking to the refer loans. Postage for the letters was either paid by Title or XYZ. Supported evidence. With the requirements to complete submit, obtain approval from XYZ was evident that XYZ had knowledge that the leads of marketing materials were provided by the Title. In fact, some XYZ managers and first-hand knowledge that the MLOs under the supervisions were received marketing service Title. For example, one manager knew about the illegal services and that were provided by Title, being told directly by the MLOs about the marketing service that were provided Title, reviewing the advertising approval from the identity Title as source of marketing material, refinance leads. In order ordering letterheads at the request of loan officers. Eventually, the manager discontinued the loan officer used the postage machine mailing. However, the manager did not request the loan officers discontinue to illegal practice. The loan officer continues to submit leads from the title to approve. They also continued in order to stationery XYZ marketing letter with the approval of the branch manager. Furthermore, evidence that XYZ and title knew they were violating the application and was evidenced by emails, which were made to attempt to cover the trail of illegal marketing activities. In October 2011, Title employees emailed one of the printed emailing companies by the Title and the marketing services scheme and wrote, I need you to provide me with some invoices that will ultimately not use. This is our client's have record. The true invoices will be sent to Title and will be still paid on Fridays. Please just put their names in the bill to section. They will not actually be paying the invoices to you. Title will do that. Later that same day, some Title employees again emailed and mailing the printing company and wrote, can we also have invoices for the certain loan officers printing stuff that folded and posted for 500 each? They would be individuals fake invoices for the job that you did last week. You did a few jobs for them. So we just needed the fake invoices billed to the certain loan officers stating that you printed fold, stuffed, post, and mail 500 to each. Warning. XYZ had multiple warnings about illegal arrangements with the Title and their employees and loan officers that were including federal lawsuits alleged to use the market. Hi, Joanna. It's a mortgage class. How's Kansas? Salina. Do not have adequate. ABC Mortgage Company and refers from the ABC to Title came from only 3 branches and 6 loan offices, which approximately 200 referrals refinance loans to Title. Allegations in connections with the consumer's home mortgage transaction, mortgage loan originators employed by ABC XYZ, including defendants A, were alleged to have engaged in illegal schemes such as money marketing services for referrals and settlement service businesses with now defunct Title Insurance Company. The first allegation, the violation regulations contain Section 8 and the Real Estate Settlement Procedure Act. Defendants. Defendant A was a mortgage loan originator who worked for XYZ for 1 year and a half year as well as an unnamed financial institution. During that time, he participated in marketing scheme arrangements and was paid cash for referrals as Title. In an attempt to discuss the payments, tens of thousands of dollars were paid to defendant B, who was defendant A's girlfriend, now wife, to possibly make their appearance complaint to hide from a possible investigation. CFPB findings. When XYZ and ABC and the defendant A gave the received fees, kickbacks of things of value on the agreements under the businesses, they also were in violation of Section 1036 of the Consumer Financial Protection Act. Business Referral Reg Z X prohibit against kickbacks, unearned fees. XYZ and ABC and defendants, they failed to disclose to consumer that they were participating in marketing service schemes, which constitution of omission of material facts of deceit to 10 to deceive consumers. These constitute of unfair, deceptive trade practices. XYC, ABC, and the defendant A's practices were unfair because they caused and are likely to cause substantial injury to a consumer, which consumers cannot reasonably avoid. The injuries consumers suffer as a result of marketing services and schemes are not offset by the defendant to the consumer conception. Okay, guys. So we're coming to a 15-minute video. You guys can also watch this on YouTube. So if you guys want to watch it, we can close off with this last page on chapter 3. Okay. Affiliate Business Agreement. AFBA. While kickbacks from a referral are prohibited, Regulation X does not recognize the legitimacy of affiliation business arrangements involving real estate settlement services for federally related mortgages. Seller requires title insurance. Section 9 of RESPA prohibits a seller from requiring the home buyer to use particular title insurance company either directly as a condition for sale. Buyers may sue or seller who can violate this provision for an amount of equal to 3 times the charges of title insurance. For more information, see Regulation X 12 CFR Part 1024. Limits on escrow accounts. Section 10 RESPA sets a limitation that the amount of lenders may require the borrower to put in escrow accounts. An escrow account holds money for purpose of paying taxes, hazard insurance, and other charges related to the property that some mortgage lenders collect every month, along with a mortgage payment. For information, see Regulation X. RESPA does not require lenders to impose an escrow account or borrower. However, certain government loan programs and lenders may require escrow accounts as a condition for a loan. Example, a mortgage loan that includes mortgage insurance must have an escrow account. All government insured or guaranteed loans, a loan that meets a TILA, truth in lending, defined as a higher price, loan is required to have a lender impose escrow account for at least 60 months. Certain lenders are required to collect monthly escrow payments for certain mortgage loans for at least the first 5 years of mortgages. Okay, guys, we already did a 60-minute video. That's it. So tomorrow we'll come back, okay, to chapter 4, the requirement disclosures. So I have any questions? Anybody have any questions? Let me get my phone here. Okay. What are you guys doing? Nope, nobody has questions? Okay, that's it. Give you guys a couple minutes before you guys say goodbye. Okay?